Well, the market is at the high point of the day. We have Ms. Tulsian joining us in our studios. As Mithil Pradhan is also with us, and Parag Thakkar of HDFC Securities is also with us. Good afternoon, gentlemen. Ms. Tulsian, first a word on Tech Mahindra, and the fact that the stock is down 4% now. Are you a bit worried about this transaction, and is the market right in punishing the stock?
Anuj, I am very much concerned on the transaction, because if you really see the broad contour, 25 million euros upfront, 8 million euros for open offer, 20 million euro further infusion, 115 million assuming the liability. That all adds up to about 175 million. What is the top line? 85 million euros. And company has made losses in 10 years out of 11 years. Yes. So I don't think that you can pay a price of 1300 crore for a car design company, because definitely, and 60% of that is going into Tech Mahindra. Sometimes, it is, you see that as an unrelated expenses also. Everything can be clubbed with the technology. Even a publisher can say that I have a technology element in it. Even a steel maker can say I have a technology element in it. Any damn industry can say that. So firstly, it is very much unrelated. Suppose if Mahindra and Mahindra would have put in the entire amount, it is something like that you are falling on the cash balance or maybe the surplus of Tech Mahindra. That is why you have given them 60%, because this is more related for Mahindra and Mahindra. Okay, they have all been going for the acquisitions abroad also, but car designing, honestly, I don't see as related for Mahindra and Mahindra also by paying 1250 crore, and this is very much unrelated for Tech Mahindra. So rightly, market is rightly punishing them for this acquisition.
Yeah. Okay, by the way, look at the way Indigo is just soaring now. It's a new high that Indigo has hit today at 1165, and just to jog your memory, what 860 was the listing price that Indigo saw on the 10th of November, and since then, look at the way that stock has just skyrocketed.
765 was the listing, was the IPO
the issue price.
Was the issue price.
Yeah.
Sonia, if you remember, on the listing they also had maintained, this is about floating stock. This is more than anything else. There's absolutely zero float in the market. We all know who has invested in Indigo, and this is what's playing out. The real test for Indigo will emerge once it gets into the F&O market, because once it's in F&O market, then you can take fresh short positions, and then if you want to sell, you can do that with the naked shorting. That would be the real test. Till then, I won't be surprised to see continuing higher levels on Indigo that you've seen even in today's trade.
Also, a lot of value unlocking has slowly and steadily happened in the other aviation names as well. So just look at Jet Airways. Ever since Indigo listed, Jet Airways has gone from 450 to now almost 600 rupees. It's at 583 rupees currently. So there is value unlocking that we've seen in some of these other names as well. Mr. Tulsian, you have been talking about this in the past, how there's perhaps more value lying in Jet and SpiceJet. But now Jet, is already at close to 600. Is there more value there, you think?
See, actually, first, let me first touch upon the Indigo, extending the point of Anuj. If you really see the volatility, I don't think that this kind of volatility is warranted in Indigo. Last week, we have seen a price of sub 1000 rupees. Yeah. And now it is at an all-time high of maybe 1175, something like that. So probably the strong hands or the low float, which has all been captured by the few people, we don't want to name them, they have all been, playing on the volatility. I'm not saying that they are playing on their entire quantity, but they are playing on the volatility. And, they are trying to pull it up to maybe 1175, bring it down again to maybe 1000, 1050. So that kind of behavior is definitely not good for a stock, or it is damaging the what you call characteristic or maybe the value, the worth of a stock also. This creates a bad name. Now coming on the other stocks, maybe like Jet Airways or maybe SpiceJet, they have all been holding up at those levels. If you really see SpiceJet, okay, there was some cash and carry kind of news, coming in on SpiceJet, that the airport authority has put them on a cash and carry, which was denied subsequently. But still, you have not seen the other airline stock, moving in sync. If you plot the chart from the listing price and, if you see the other price behavior of other two stocks, you will find probably the other two stocks have given you relatively better returns, in terms of the compared to Indigo. So my point is that this kind of volatility will definitely keep away the retail investors. Only the traders, will keep come in and out. So I don't think that this is good. But coming on the other two stocks, as long as crude remains low and as long as Indigo remains strong, it rules at around 1200, you can always take a call on two other stocks.
Okay, by the way, the turnover on Jet Airways is higher than Interglobe Aviation today. I mean, if you multiply price to volume, but again, Jet Airways has higher float than Indigo. We have Mithil Pradhan also with us with some technical strategies. Mithil, hi, good afternoon. One of your stock picks is Jet Airways actually. Take us through that and your other pick.
Hi Anuj, sure. See, Jet Airways has broken out of a symmetrical triangle. Now, the thing that you need to note is that this particular triangle has been forming for a period of 6 years now. And the breakout, with a higher high, now it has created a higher high above the 2015 high. When I see the chart of Jet Airways, I don't see any resistance till about 680, and the triangle is actually giving a target of 900 plus. So this is really a great development in this stock of Jet Airways. I don't know, it's about like after a decade, the stock is doing really well. So my suggestion is that we should look at going long. Stop loss is 549 that I expect to keep, and about target of about 685 on the upside.
Okay, so that's on Jet Airways, but you also have another strategy, Mithil, on Century Textiles. Take us through that.
Yeah, Century Textiles is a very bearish stock. About 6 months back, it had a big panic move down, and after that, it went particularly sideways. Now, my strategy is to sell this stock on rallies. And this area of about 545 to about 550 is a very strong resistance for Century Textiles. And though I feel that Nifty will move up a little bit, I feel that Century Textiles will have certain amount of resistance. And it's not only about Century Textiles, it's all about other textile companies like Arvind, etc. They are all facing strong resistances on the upside. So I will take a call to sell Century Textiles with a stop loss of about 551, and I'm expecting at least 524 on the upside, though I will not be surprised if it goes to about 500 levels.
Okay, that's a couple of technical strategies. Parag Thakkar is also with us. Parag, hi, good afternoon. You also have a lot of stock strategies. So let's start with Pidilite. What's your call here and your price target?
So basically, first of all, I would like to sum up my view on the market itself.
Yeah.
I think because tomorrow the big event is there, but I think it is fully priced in as expected. And in my view, because there is no inflation at all, anywhere in the world, because commodity prices have gone down so much, and plus strong dollar, in fact, keeps a tab on inflation again. So I think the language will be very soft, and it will be slow and gradual, and which will actually unwind the overbought dollar trade, in my view. And so if we had got GST, it would have been a great combination. On one side, dollar trade unwinding. So overbought dollar trade unwinding, and on one hand, if we could have got GST, then then we would have got a very good rally. But of course, on the global side again, there are some risks still remaining due to credit risk emerging from lower commodity prices. So much leverage has gone to fund oil in US or say steel capacities in China. So keeping this in hindsight, I think. I prefer safer stocks, first of all. So like for example, Power Grid or Cipla or Pidilite. Pidilite, for that matter, definitely it is linked to economy in terms of both in terms of construction sector and export sector, as major portion of its revenues are linked to these two sectors. And right now, as we all know, both are under stress. But the point is that it is during this stress times only you get a blue chip companies with very limited competition and strong pricing power and excellent EBITDA margins, cheaper. And plus I think it is a innovative company. I always call it a 3M of India. So it's a good company to buy on dips in such uncertain times.
Okay. All right.